Speaking of Netflix earnings, we're digesting the report right now. Myles has been going through the numbers for us. And Myles, what do you have?
Yeah, just a quick look here, Shauna, at the latest quarter for Netflix. I think the main headline here is going to be that Ted Sarandos named co-CEO of the company, joining Reed Hastings in that role. But let's go through some of the results here quickly. Company added 10.1 million subscribers in the second quarter. The company's own guidance suggested they'd add 7.5 million. So beating their estimates there. The street kind of looking at things like, app downloads. Some folks thought 10 to 12 million was likely. So kind of at the low end of what you might call the whisper number there on net ads. Earnings per share, $1.59. That compares to $1.82 expected. Revenue coming in basically in line, $6.15 billion against $6.1 that was expected by analysts. Just looking quickly at the stock here, see if it's moving at all in the after-hour session. The stock did finish today's session higher, not yet seeing a quote for after-hours moves. But again, the company coming in with better net ads during the second quarter than their own forecast. And again, Ted Sarandos, the chief content officer at Netflix, now the co-CEO along with Reed Hastings over at the company.
Yeah, Myles, I'm taking a look at the action right now. It actually looks like shares are under a little bit of pressure, and I think a lot of that has to do with its forecast for the third quarter. And it kind of echoes what we heard from some of the recent analyst notes that we got out when we talk about the valuation of the stock and whether or not Netflix can maintain this type of momentum. And in the third quarter, it looks like subscriber forecasts trailing those estimates now expect to add 2.5 million. The estimate was for a 5 million sub ads. When you take that into account, obviously this is something that maybe the street clearly is not happy with, and that's why we're seeing such a reaction in shares today. But Myles, I mean, this will be interesting going forward. And of course, the number one thing I think that analysts are going to want to hear a little bit more about on this call will be its co-CEO, Ted Sarandos, just in terms of his plans for the company and also really how this is going to change that executive dynamic at the top.
Yeah, I mean, I think there's always questions with any company when you have an executive change, not the least of which when it's a founder CEO. I mean, there's not too many of them that have been at the helm of a company they founded for this long. Reed Hastings is in some rarefied air when it comes to that part of his tenure. So seeing Sarandos added as a co-CEO, very interesting to see how the company discusses that. But, again, as we're looking at the stock here off 11%. This is a stock that got to a record high just a couple of trading sessions ago on Monday, closing at $570 or trading to $570 per share. So, the stock now back at 460. This is the volatility I think investors have gotten used to with Netflix. But I think with the company saying, our additions for the year kind of done, guiding to 2.5 million subscriber additions in the third quarter. They note in the letter they've already added as many subscribers in the first half of this year as they did all of last year. And so with a little bit of normalization on that trend, I think the street's certainly taken a little bit of a breather on a stock that's been such a big winner during this pandemic period.
I want to pick up on the point about Ted Sarandos, because I think, a surprise, I think maybe in the quarter, but it shows you what Netflix at the end of the day is really about. I mean, Ted Sarandos is the guy that has brought on all of these big shows or green-lighted all the big shows that Netflix has now become known for. And so in many ways, this is kind of a move that makes sense, given that that's kind of at the priority moving forward. He isn't just in charge of U.S. content. Of course, he has been globally as well. So he's got good visibility on that. I do think, Shauna, you talked about the valuation question, and it seems like the recent notes that we've gotten on Netflix is really about this increased competition. And we've talked about the saturation in streaming for a while, but that seems to be a bigger concern moving forward because so many people are spending time at home, and that's given a lot of viewers an opportunity to check out the other streaming services. And I guess the question moving forward is how many of them are going to say, well, maybe Netflix isn't worth my time right now. I'll cancel it for a few months or so, move on. And then how many of them are actually going to come back?
Yeah, and Kiko, to that point, just going through the letter here, Netflix has a specific section where they discuss how easy it is for folks to cancel and how little that has typically impacted their churn over the last couple of years. And I think as we see more streaming services come online, it's going to be a relic of past generations when people say, I got to change my cable and I got to sit on hold for 4 hours, right? That's just kind of all gone. And so I think, Netflix views that as sort of table stakes in a way. But just, again, to talk a little bit more through this letter, again, with the stock off 10% after hours, some commentary here on cash flow that I think it comes down to the business model. So right now, Netflix expects they might be break even cash flow positive in 2020 because they've halted so much of their production due to the pandemic. Well, the street had looked at the cash flow burn as continuing, but maybe moderating as they normalized operations in a way, right? Netflix has spent a ton of money up front. They've been clear with investors. We're going to buy all this content. Then we have, the profit on the back end with the library. Well, the pandemic has pushed out that schedule a little bit. And so if we want to talk about the valuation, and it's kind of a stock that floats away from traditional measures, but there is a play here of we spend a bunch of money, we buy a bunch of content, then we make money down the road. That timeline has clearly been extended with the pandemic. And that's another, so it's a weird way to say, like, cash flow is positive. That's actually bad for Netflix because that means it'll be more negative in the years ahead, when I think some investors thought that period of their corporate history had been over.
Hey, Myles, I just want to pick up on one thing you mentioned. I just noticed where they did mention, so for subscribers who have not watched anything in the last 2 years, they said they're actually going to stop billing those people. I think that's actually very nice of Netflix to do that. They don't have to do that. They said that will account for a small hit to revenue, but they think it's the right thing to do. Okay, good. And I also noticed where they do discuss competition here, they actually mention TikTok as competition. They also, along with Warner, Disney, NBC, they point out Apple and Amazon, two of the most valuable companies in the world they have to compete with. So that's a little bit of woe is us. But they say TikTok's growth is astounding. So I guess they consider, teenager content to be competing with their own content.
Yeah, Rick, that is a good point. It will be interesting to see just in terms of maybe the potential impact that could have, and also what that means really for the demographic, I guess, for Netflix going forward. But again, just taking a look at this share, the price action that we're seeing in the stock after hours following this better than expected report, I think we can say, at least in terms of the second quarter numbers. Obviously, it's that third quarter guidance that's causing a little bit of concern here for the company. Shares off just around 10% after hours.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.